Welcome Math at Work grade 11 students. Today we're going to be talking about Chapter 5, Banking and Budgeting. So this concept here in this chapter, really important. Okay, you're all going to use it. There's a list of keywords over here that we're going to talk about when we discuss this chapter. If you want to take a minute here to read this paragraph, pause the video, that's absolutely fine. Some questions that we will talk about and discuss as we go throughout this chapter. What are some possible sources of income, and what are some ways to put our money away for savings, and how can someone save for a large expense? Okay, and that's where we're going to get to our budgeting stuff. Not necessarily today, but throughout this chapter. Okay, here's some questions for you to think about. So for question 1, express each time period in years. If you'd like to pause the video right now, that would be good to do, and you could answer those questions. Okay, so for question 1, express each time and period of years. So 24 months, you could divide 24 by 12. There's 12 months in a year. That's 2 years. 26 weeks, well, there's 52 weeks in a year. So 26 weeks is actually half a year. Or 0.5 years. 6 months, well, 6 months is half a year as well. 18 months is 1.5 years, a year and a half. 1 day, that would be 1/365th. April, if we think about how many days there would be in April, you can take that number of days in April, divide that by 365. And then it says from your current age until you're 60. Okay, so take 60 and subtract your current age, and that's how many years there are. That's when a typical person retires in Canada, is when they're 60. Okay, you could also talk about time period in months if you want to pause the video before we do those. Okay, so you could multiply your years by 12 and figure out how many months that would be. Okay, so 4 years times 12. Okay, or 5 times 12. 5 times 12 is 60. 4 times 12 is 48. Okay, we could figure out all these numbers. Sometimes we buy cars and we have to make monthly payments on them over, let's say, 60 months. That's a 5-year plan. Okay, express each percent as a decimal. Okay, to do that, you just take the percent and you can divide it by 100. And that's how we can put it as a decimal. On the flip side, for question 5, determine without using a calculator 1% of 100. That's just 1. 1% of 300 is 3. 1% of 1,000. Okay, you're taking, you can compare with fractions, or maybe you are using a calculator. Not sure. 1% of 1,000 would be 10. 1% of 5,000 would be 50. Okay, 2%. Same exact pattern. 2% of 100 is 2. 2% of 200 is 4. 2% of 2,000 is, okay, 10%, you're just moving the decimal one place to the left. 10% of 700 is $70. Okay, one of the things we will talk about in this unit is taxes. Okay, in Canada, most purchases are subject to federal government's Goods and Services Tax, or GST. Some provincial systems, some provinces, have a provincial sales tax, a PST, or some put them together, and that's what they do here in Nova Scotia. It's HST, so it's a harmonized sales tax. So it's federal for the goods and services and the provincial sales tax. Okay, and our tax is 15%, or 0.15. You should try and calculate this out. So if you could calculate 10%, okay, so like let's say for example we want to find out the tax on $100. Well, what works out really nice with Nova Scotia is you can take 10% of it and then half that and add your 10% and your 5% together. So 10% of 100 is 10. And half of 10 is 5, so $10 and $5, $15 tax. Okay, or if you just want to multiply it by 0.15, you can do that. So 15% of $1,000 is $150. Okay, and then same thing with the other questions. Question 10, if you're purchasing a new car that costs around $30,000 approximately, so if you could take a guess, how much tax would you have to pay? If the actual cost was this amount, $29,483.09 before taxes, calculate the exact amount of tax you'd have to pay. So multiply that by 0.15. You'd be able to figure that out. In Chapter 5, it's broken down into 4 different sub-chapters. So we're going to tackle accounts today. Then next week is budgets. Then we'll have simple and compound interest, and then investing and borrowing money. When it comes to accounts, what we're focusing on, so over here, we're describing a variety of banking services available. So you'll have a Google sheet that you'll have to do to answer some of these questions and meet some of these outcomes. Identify various banking service charges, and then describe ways that ensure the security of personal and financial information. Okay, so what's an account? So many people have a bank account, or maybe their parents have a bank account. An account is a place at a financial institution to hold your money. And by giving your money to a financial institution, you can get interest. And interest can work 2 ways. You can make interest, or you might have to pay interest. And interest is a fee paid for borrowing someone else's money. Okay, like for example, credit card interest. Now, along with that, bank accounts, there are service charges. Those are costs sometimes charged by the financial institutions for providing services such as banking by telephone, banking over the internet, or just using banking machines. So certain accounts only have a number of charges or transactions that they're allowed to actually use per month. Some are unlimited, and those cost a different amount than someone with, let's say, a student account who's not going to use their account that much. However, as a teenager, when you're looking for a bank account, if you don't have one already, or if you're just shopping around, there are tons of incentives. So an incentive in relation to banking, anything that financial institutions offer to customers or potential customers that makes doing business with that institution seem more attractive. Okay, so for example, the first time I got a credit card, I got it because they gave me free golf balls. I know, seems ridiculous. I got a bank account one time, and I got 2 free movie tickets. I got a bank account somewhere else, and they gave me a tablet. These are all different incentives because you're starting a business relationship with that company, and that can work out both ways. You can cancel your service after certain times, but incentives definitely help, and it pays to shop around. A bank statement is a record for all the transactions that you have in an account over a period of time, usually within 1 month. So if we take a look here at an example. So if we take a look at this, it says, when Coraline got her first job, she opened a savings account at the bank close to where she lives. Coraline's pay is electronically deposited into her account every other Friday. The bank charges $5 per month for managing her account, so that's the cost. And the account fee allows for 10 transactions each month. Additional transactions are $1.25. Transactions using her bank card at another institution cost $1.50. So below is her bank statement. And you'll notice here we have all these different details. We have credits, and then we have debits. Okay, so this line here is credits, and a credit is money that's added to a bank account. So sometimes when people think credit, oh, credit's bad. Well, a credit is an addition. A debit, that's why they call it a debit card, because you're usually taking money out or paying for certain things. So there's some questions here to try and answer. So it says, what's her opening balance? What's her closing balance? How many credits were made to her account? How many debits were made to her account? And explain how the bank determined the account fee debited from her account on August 31st. This $8.75. Okay. So I'll give you a minute to do that. Pause the video. Okay. Now now that you've done that, you might want to switch back and forth between this screen, and we'll take a look here at the answers. So for the first one, opening balance, that was $10. Okay, that's what was up here. That was the balance. Now her closing balance was $4.68. That's what her closing balance was. Okay, now there were 4 credits and 15 debits. But for transactions, there's only 13 transactions on her account. So those transactions include deposits, withdrawals, and debit card charges. On August 8th and August 12th, she withdrew cash from an ATM. So that's an automated teller machine. They're machines that you use to get money. You guys know what those are. So those fees actually don't count as transactions because she actually paid for them. And sometimes the bank will actually double up that cost. Okay, so below is the calculation of that $8.75. Okay, because it cost $5 for her account fee, and then the additional 3 transactions that were above and beyond her 10 that she was allotted. So 3 times $1.25 plus your $5 for having that, and $8.75. Now, Math 11s. Your homework is to try questions 1 through 4, 5, 6, 7, 8, and 9. Now I've also included a PDF of this slide presentation if you want to use that, and I'm also going to attach the textbook. If you do have any questions, there is my online meet hours between 1 and 1:30, or if you just want to hit me up with an email. I will be marking these questions, so if you could email them to me over the Google Classroom, I will attach a link for you to hand those in. And what you're doing is you can either take a picture of the work that you've done, or you can do it out in a Google Doc. It's really up to you. Okay? Have a good week. I'm also attaching an additional assignment called Discovering Banking. It's for you to look over different accounts with any branch or any bank that you're really interested in. Realize as a student, like if you're gonna start a bank account, there's a lot of incentive to have you as a long-term customer. So most teenagers do not pay banking fees, and if you talk to your bank, you can often get them waived just by saying, hey, look, you want my business, you want it long-term, we can work something out there. That's something that you can negotiate because you are, you're the biggest key holders to that, right? Like you can say, well, I'll just take my business elsewhere, and that speaks volumes. Also, we're going to talk about investments that you can make. Remember, for that assignment, the best investment that you can make is an investment in yourself. Have a good week.